Hey, this is Arthur Hill, Chief Technical Strategist at TrendInvestorPro.com. Thank you very much for tuning in to our YouTube channel and watching this video. If you like this video, be sure and give us a thumbs up. So I want to highlight a few themes that have been working here in 2020 and how they've been building up as the year has progressed. And actually, some of these things started at the end of December. But the first thing we're seeing is rate-sensitive issues are performing very well. That would be REITs, utilities, and of course, Treasury bonds. And that's what I'm going to hit right now. And this, setup that we had in REITs is one of my favorites because you had this huge advance. And after a new high in October and a huge move, you're entitled to a correction. And so we got a falling wedge back to the rising 200-day moving average. So the fact that the 200-day moving average was rising, and then you can see the PPO 20-200 remained positive, which means the 20-day EMA remained above the 200-day EMA. Those two things told you the longer-term trend was up and that this decline was a correction within that uptrend. And a correction within an uptrend is an opportunity. And so we got this breakout at the end of December, and then we got that surge in mid-January on December 16th, when we got the break above those highs there, and we've moved to new highs since. So we started seeing REITs outperform. The next thing I want to show you is that bonds started outperforming and breaking out. And so I highlighted this one in January, around the 23rd, but we've been following it for several weeks before that, because this is a huge move again. And after a huge move, you're entitled to a correction. You're entitled to a rest. And we got the falling wedge, then we got that big bullish engulfing, and then we got the breakout. And this is a bullish breakout for bonds. You can see TLT's holding above the breakout with this little consolidation, and I would expect it to move higher and hit new highs. If you look at the indicator window, we had RSI moving above 60 in December 2018. And so that's when RSI started its bull range. And it stayed in that 40 to 80 range since. And as long as it stays there, I think that is the long-term bullish range. That's a bullish range. That's bullish. Did I say bullish? And then we got this momentum thrust with Stochn RSI moving above 0.8. And this is the stochastic oscillator applied to RSI. So the fact that the trend was up, we got a correction, and now we've got the breakout and that momentum thrust with Stochn RSI, that is bullish for bonds. Now, another thing that we were following was gold. And gold also got a breakout and is actually leading, and we're seeing a positive correlation between gold and bonds. I don't know why, and frankly, I don't care why. I'm really more interested in what the pattern itself says for gold rather than the reason behind the move or the correlations in the intermarket arena. Because, gold and bonds may be correlated positively now, but they may be negatively correlated in 6 months. If you're interested in gold, if you're interested in bonds, watch bonds. So if we look at GLD, there you can see the first pullback at the beginning of 2019, and then the breakout. We had the second pullback at the latter part of 2019, and then the breakout right around Christmas and a move to new highs. So gold is performing well, and you can see there's RSI in that bull range, 40 to 80. So it is in bull mode, and then we got that move above 0.80 in Stochn RSI to get the little momentum thrust. So that is the theme that is working now. And gold's, an alternative to stocks and risk assets, even though it's a risk asset, if you will. But money's moving into utilities, REITs, and bonds, and gold in 2020. They are all strong. So that makes me go, So at the end of January, I started talking about a correction. I had a video talking about that triple 90% down day in 80%. And after we got that, then we had a bounce. But if you look at the charts here, if you look at SPY, it moved to a new high. And I also said that corrections were like a box of chocolates. You never know what you're going to get. So SPY moved to a new high, but it could correct and move sideways. And if you look at MDY, well, it did not hit a new high, so it's underperforming in that regard. And then if you look at IJR, it's got a lower high working. So IJR is underperforming and could be correcting here already. And MDY is flat and SPY is up. So it is a mixed bag right now. Now we move to the ratio charts. And I highlighted these ratio charts in a video on the YouTube channel for Trend Investor Pro, and they are still showing risk aversion. Now, we got this move down in the risk asset here. So this is the high beta ETF relative to the low volatility ETF from Invesco, SPHB:SPLV. And you can see risk was on in October when this ratio moved higher, and then risk turned off here in January. You got a little bounce in early February, but it might be turning back down again. And overall, that's a lower high. So it looks like we got risk aversion over the last 6 weeks. And then we got high beta relative to high quality. Got that little bounce in February, but still overall risk aversion. And then we got stocks relative to bonds. This is the equal weight S&P 500 relative to AGG. And it got a bigger bounce, but it didn't exceed that high. And then I'll scroll down and we look at the other two ratios. We got stocks relative to treasuries. This is SPYTLT and potential lower high forming, and that ratio could be turning down. And this one here, junk bonds relative to treasury bonds, have been underperforming since January, early January. So junk bonds, of course, are the most economically sensitive bonds, and treasuries are the big safe haven bonds. And so if money's preferring treasuries over safe haven, or treasuries over high-risk junk bonds, that's risk aversion in the markets. So I think we still have big odds for a corrective period now or in the coming weeks. Thank you very much for tuning in to this video on our YouTube channel. If you want to know more about trendinvestorpro.com, go to the website. There's free and premium content available. If you like this video, please give us a thumbs up. Thanks for tuning in and have a great day.